Good morning, everyone, and welcome to this morning's webinar. We'll be looking at the Forex market for at the beginning of the, well, we've missed the London session, but broadly speaking, the London session. So thank you so much for taking the time out to join us today. If this is your first time joining us, I'll be running this webinar, myself, Anna, and my husband, David, who's sitting behind me. But before we start, as usual, can I just draw your attention to the disclaimer that I know you can see on your screen. I'm not quite sure, but I think it's slight, probably can't see all of it, but let me just do something. Hold on a sec. That's better. Should be able to see all the wording now. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So what we're going to do in this session, we are going to be looking at the charts, obviously, what's going on in the Forex market. We're going to be looking at it, the charts through the prism of what we call volume price analysis, which is the relationship between the price action and the volume being activity. Now we're in the spot market this morning, and that's obviously going to be tick activity. And I'm asked this question all the time, you know, is tick as not trade volume, it's activity, it's the noise of the market, if you like. Is it as good as a trade volume? And the short answer is yes. Being the spot market, you're not going to get 100% because there's no central exchange, but I can reassure you that for the purposes of the methodology, it is it's enough to be able for us to make an analysis. And the analysis that we want is basically, we want to know where the price is likely to be going next. And this is what VPA does for you with the Forex market and all markets, but the Forex market in particular. We also look at the news releases, the fundamental releases. We also look at what's going on in the related markets. The related markets give us a heads up on what is known as sentiment. Sentiment being, is it risk on, is it risk off? And there are certain currencies and currency pairs which will reflect that. So yes, we all start with the chart. We all start with an analysis of the chart, hopefully with volume price analysis. There are 5 elements to VPA, but you know, price action and volume, but that chart does not move in a vacuum. It is, you have to place it within the context of what is going on, as I said, in background in terms of related markets, but also what's coming up with fundamental news releases. And all the explanation of the concepts and the methodology are in the books that are up on Amazon, and we've actually put them together here. This is a little digital library of the ones that are particularly for the Forex market. Right, so what have we done? What David and I have done is, because the Forex market is unique in the sense that you're trading one pair against another, you're considering one economy against another, you're trading one country against another. What we wanted to try and get a feel for is where the money was flowing to, you know, what is actually being bought at any particular time. And out of that came these very particular indicators, which we will show you as we go through the session. We start with, over here on the left, what we call the currency strength indicator. This actually breaks down the individual currencies to tell us what is being bought, what is being sold. Then we have what we call the matrix, which takes that data and puts the pairs together, so we get an idea of which are the strongest pairs, which are the weakest pairs. But more importantly, it's like a scanner, if you like, on the individual pairs, because you can see immediately, without even looking at the charts, well, you know, which pairs are moving the most strongly. So you can then say, okay, well, maybe I'll go and have a look at that particular pair because I'm more likely to find a trading opportunity. And even if you don't take that approach and you like to focus on specific pairs, you maybe have 5 or 6 that you like to focus on, it gives you an instant heads up of what your pairs are actually doing at that particular moment. And as I said, it can tell you basically, is there anything going on at this particular moment? You may have to be a little patient. Then we have what we call the array. This is really a trend, picks up the strength of trend. The matrix is as I said, the best way I can describe it is like it's like a scanner, and it also tells us whether maybe the buying or the selling in one particular currency, as we see here. For example, this was the British pound, as we can see, was falling quite strongly. Is that selling? Is it universal in all the sterling pairs? That's the first thing. And secondly, where is that selling the strongest, as it were? So if sterling is one of the currencies that you like to trade, as I said, you can use it as a scanner, you can use it as confirmation for, maybe cable that you trade or pound yen. As I said, the array is much more to do with trend, the strength of trend in the individual pairs. And finally, the heat map. The heat map looks at the performance of the pairs across the time frames, basically, and it also ranks. It's a very, very sophisticated indicator, which I suppose you could also use as a scanner as well, because you can say, well, what is the strongest pair up here? It just happens to be the screenshot of the pound Aussie. It's, as you can see here, it's at the top because on the slower time frames, it's obviously been in a very, very strong uptrend, but in the faster time frames, there has been a pullback or a correction. So all sorts of information that these indicators can give you. But as I said, the best way to look at them is to actually see them in action. And I read there's some interesting things that have been happening, particularly around the British pound, and also we'll look at the Aussie because that's had a nice move, certainly overnight, but not sure if it's going to carry on. We'll see. From there, we've also developed a program, a forex program for traders who want to take their education further. The program also now comes with the option to become a funded trader, and you basically trade our money. It's not your money, and it's without any risk at all. And the way the program is structured, you start at what we call an evaluation stage. A small amount of money between, you can opt for $5,000, $10,000 or $15,000. You work your way through that, and at the end of that, you go on to what's called the portfolio stage, and where is it quadrupled, David, isn't it? It's quadrupled. So if you start on 15,000, you then are given a pot of 60,000 to trade, right up to 2 million. And the program itself, these are the modules. You'll find details at quantumtradingeducation.com. I am asked the question, and I'll say, well, you've got the books. Do I actually need the program? The short answer is no, because we have traders who are very successful just with the book. So what is the difference with the program? The program is different in as much that certainly on the technical analysis module with VPA, it does take it to another level, and it brings in very much the work of Richard Wyckoff. VPA is based on the principles, the concepts that Wyckoff developed back in the 20s and 30s, and it just takes it that much further, and it's a deep dive. It's got a psychology module. Just everything is, a book is fine. Please don't get me wrong. You can learn an awful lot. And as I said, we have traders who do very well. They've taken the book. They've taken the concept. They've adapted the concepts. They've blended it into maybe an approach that they have at the moment. But the program is really it's the next level, as it were. And it does also come complete with the full suite of the quantum trading indicators. Right, David can explain a little bit more about that in the webinar, and if you've got any questions on anything, just drop them into the chat box and we will answer them for you. Right, what's actually been happening? So this is how I actually set up my my indicators. This is my first port of call. When I come to my terminals in the morning. And what I like to have is I actually have the hourly chart and I have the 15-minute chart. And the reason for the hourly chart is it gives me a snapshot of what are the currencies on the CSI, what have they been doing. Obviously, we've just come out of the Asia Pacific session, and London has been going for 20 odd and half an hour or so. And well, I can see immediately there's been a continuation of the selling of the dollar, and that's now looking very overextended on the hourly chart. As it's London, the first thing I want to have a look at is, well, what is happening with the British pound? And well, we can see here it's been moving sideways. Now it's sort of ticking up, so maybe there is an opportunity now to buy the British pound. Once with the session crossovers, particularly with London, you do have to give it a little bit of time to settle down. It's one of the reasons why we're not starting these sessions anymore at 7:45. We used to start at 7:45. I was just fed up with, you get this whenever new traders and another time zone comes in, you get this influx, you have this inrush of volume, activity picks up, which is great, but at the same time, positions are closed out, positions are opened on the institutional side. Price can go all over the place, and trying to find a trading opportunity at this crossover is probably really tricky. There's a lot of trap moves, so it's best to let it all settle down a little bit. Half an hour, 45 minutes is usually about enough, and it's great. And then you can say, right, okay, Europe's open, Asia's now closed, pretty much shut down. Let's see what's happening in between now and certainly towards lunchtime, when we start looking at, the North American session, the forex North American session kind of gets underway. So at about 1 o'clock, David, 12, between our time, 12 and 1 o'clock. And then obviously we have the Wall Street Open at 2:30 our time. So what this also tells you, that whilst this is a 24-hour market, it does have a particular rhythm. It does have, definite open and local open and closes, if you like. And you have to be aware of this, particularly if you want to restrict your trading to a number of pairs. In fact, one of our students has opted to, he wrote to me and said, I've opted to focus on 3 pairs, which is absolutely fine. But he was finding that the trading opportunities, weren't coming around as often as he would perhaps like. And first of all, if you are going to restrict yourself, you're going to have to be more patient. But what you also have to do, you have to do a little bit of background research. Have you selected the 3 pairs that perhaps are going to be moving at the time that you are in front of your screen? So it's a little bit more, you have to do a little bit of work on the volatility of the pairs. In the program, we do actually explain how you can work out for yourself what we call the volatility coefficient for a particular pair. Alternatively, we also say there's a very nice site, there's a very nice page on investing.com which tells you, and it also tells you what session a particular pair is likely to be moving, and in what time frame, and on what days, and so on and on it goes. Right. One of the currencies which is really interesting is the Aussie dollar. I mentioned earlier about related markets. You not only have to look at the performance on the chart, but also the fundamental data, but also look at related markets and what the Aussie dollar does, what the New Zealand dollar does, and also to some extent the Canadian dollar, is they are an expression of sentiment. Sentiment in the sense that if the market is feeling positive, if the indices are going higher, if equities are going higher, in other words, traders and investors are happy to take on more risk, you will find that the Aussie, the Kiwi, and the Canadian will be bought. What will they be bought against? They will be bought against the yen, in which case the yen will be falling, the Swiss franc will be falling, and to some extent the US dollar will be falling. The US dollar and the yen, they act as both risk currencies and also safe haven currencies. You have to understand also with the Aussie, obviously being the one of the principal currencies in Asia Pacific, it will move quite strongly, obviously, in that session. But we're very lucky in that it does also move in London and also in New York, but not necessarily in the pairs that are moving, in its local market, as it were. So what we can see this morning I've actually, and this is what I said about using the matrix as a kind of scanner, is basically I've highlighted what I can see here. I can see immediately that the Aussie has got this nice strong move, moving higher on the hourly chart, and I can see here that of the Aussie pairs, the strongest is the Aussie dollar, we've got the Aussie Swiss, and we've got the Aussie yen, and down here we've got the Euro Aussie. Now these numbers that we see here on by the side of the pairs also gives us an indication of whether it's a strong move, it's is it a weak move. Now what we are doing with this indicator, we are going to put a note against is it just the top pair or the top two pairs? Just the top one, David? The top and bottom, where we're putting, saying, well, at the moment this is showing 27.17, this is showing minus 31.99. Now, is that high? Is that medium? Or is that low for this time frame? So it gives you a sense of the strength of the move, if you like, in this particular pair. These numbers here that are registering at the moment, they're not particularly high. I know that because I look at the indicator and I use the indicator, so that tells me that it's okay. We've had a move, but it's kind of, if this was really moving at pace, then this number sometimes can be in the hundreds basically, and on the hourly chart you would expect a high number because it's a slower chart and you would expect higher numbers, right? Then I have the 15-minute chart. You can have the 5-minute chart. I've just used the 15. With time frames, you want to be something between 3 and 5, or multiples of 3 and 5. I've got, so as I said, I've got the 15. You can even go down to the 5-minute. And really, what this will pick up is the corrections, the pullbacks, as it were. Now, sometimes those are going to be tradable. Sometimes they're not. It also depends on you. This is so if you are down on the faster time frames, the hourly is like your benchmark. So you will look at the hour and it will give you the kind of trend or the dominant trend for that particular pair. It may have got to a point on the chart, some kind of maybe a resistance, maybe a support, maybe a candle pattern, whatever, and you will get a pullback and you will get a correction. If you're on the faster time frames, you then have to decide whether is that going to be tradable or is that not going to be tradable. That is very much a decision that you have to make. At the end of the day, the one question you have to answer and you have to decide is how long do you want to stay in a trade. Some traders don't like to stay in very long. They like to get in and out on a fairly sort of regular basis. They feel uncomfortable staying in a long time. The longer you stay in, the chances are things are going to reverse against you. They're going to have pullbacks. That affects where your stops are going to be. Aside from the how it makes you feel as a trader, you've got to obviously allow for stops. There's all sorts of things. You've got to ride those pullbacks. You've got to ride those corrections. And as I said, it may not suit your trading style, your trading persona, and you've got all your money management and risk management rules to contend with as well. So this is what I'm seeing on the hour. On the 15, we can see here, as I said, we've had this heavy sell on the US dollar, but we can already see it turning up on the 15, and in fact I've got the 5-minute here, and you can see, so clearly there's now been some buying in the US dollar. I know I said about the British pound, it wasn't doing anything. That's turning up, and it looks like there's possibly a nice buy on on British pound there, and that looks like it's on the 5 minutes. So selling of the euro. As I said, this is all information that these indicators give you without you even going to look at the chart. Now, I want to look at the Aussie dollar, because the other thing you have to bear in mind, especially on the hourly chart, in fact on all charts, is whilst this is in a downtrend and it looks overextended, as we can see here on the hourly chart, markets, currencies, instruments, they can stay overbought or oversold a lot longer than we can stay solvent, and I think that comes from John Maynard Keynes. So we can see here, if I give you an example of the yen, we see the yen sold off. You see the extent to which it kind of just flatlined. It did nothing. Remember, this is the hourly chart before it started to be bought again. As I said, we've seen examples where these currencies just stay there, and on the hourly chart, literally for hours, and that can be very, very frustrating. But it is something that you have to be aware of. Now, I just want to go to the Aussie dollar, because we can see it at the top here, and we say, okay, well, we think there's an opportunity. It's the dollar is certainly overextended. Let's go and see what's happening on the Aussie dollar. And it's really to do with what this thing about session that I was talking about, session times. Now, the reason something stays oversold or overbought and it just stays there, one of the reasons is it's simply at a particular resistance or support, and this is the hourly chart for the Aussie dollar, and this is where we have another indicator here, which is our Camarilla Indicator, which calculates support and resistance levels based on price. The key thing about the hourly charts onto which this indicator is placed is that these levels are in play, as it were, for the rest of this week. And the way, so first of all, you have an instant snapshot of the key levels for the rest of the week. One of the most important levels on this that this indicator delivers is this one here, which is the R3 and the S3. So when we looked at the hourly chart, we could see on the matrix, we could see that the Aussie dollar was in fact right at the top. And when something is right at the top, then we are looking for a potential a reversal. And the reason part of the reason it has reversed is because it has hit this level here, which is the R3. Now, excuse me, sorry about that, is because it's at the R3, and this is a very, very strong level. And what often happens is the price will actually reverse from this level, and it will often deliver a straight reversal or certainly an opportunity to take a trade, certainly on the faster time frames. Now, with the Aussie dollar as well, just move that out of the way, we have to, as I said about currencies moving in the different sessions, if we look at the daily chart, the Aussie dollar, as we can see here, has actually posted most of the move has already been made, because obviously it is in Asia. So what we have to look at in terms of the other time frames, and especially the hourly time frame, is given that the currency pair has already put this strong move in already, what is the probability that it is going to continue higher? And this is where, as I said, you just have to look at the charts. You have to, as I said, the Aussie is still climbing against the dollar. As I said, most of the move looks like to have been put in already. It's reached this R3. It's reversed off the R3. I don't know whether you can see, but there's this little wick to the bottom of this candle, but it looks like it's going to have another run at the R3. If it goes through, great, then we can say that's going to provide a really nice platform of support, and the chances are it will go higher. When you come down to the faster time frames for the Aussie dollar, and that's all the time frames between up to but not including the hour, the levels that are calculated for you, these are calculated every day. They are refreshed every day. And what we can also see here is that we have a confluence of resistance levels. It's actually at what we call the R5. It's actually putting, and this also tells us that this pair has moved quite strongly already, because 6 levels are calculated by this indicator, and the daily levels, you know, the pair's already chewed through almost 5 of them on the apologies about that. So not only has it reached a significant level on the slower time frame, which always carries more weight, it's also butted up against, if you like, a level, a price-based resistance level on the faster time frames. So, and what that results in, we have a congestion phase, and you know, if this is going to go higher, it's obviously got to come through here. And where's it going to go to? Well, certainly on the hourly chart we had the R4, but that's a fair way away. We've got the R6 here on this is the 10-minute, but it's the same level would be displayed on the 5-minute chart. You know, the levels, as I said, the levels remain the same on all the time frames up to, but not including the hour. These are refreshed on every day. So as a trader, you come along, you look at the Aussie dollar, you think, great, it's overextended on the hour, maybe there's a chance for a reversal, but that reversal hasn't happened yet, because the pair keeps trying to break through these these resistance levels. And what I've done here, I've actually put the individual currencies on the extrapolated them from the CSI, so we can see the movement. And this is one of these situations with this particular pair where, because we've reached these significant resistance levels, we just have to be patient. It may go through, or indeed it may reverse. And with the Aussie, one of the factors that we have to consider is sentiment. Sentiment is a huge driver for the Aussie. At the moment, we look over, I just flick over to investing.com. Let's have a look. Where are we? Well, the futures, certainly in European shares, are up. When we talk about sentiment, we tend to refer to the US indices to gauge that sentiment, rather than, you know, they're like a proxy for global sentiment, as it were. And the US futures have actually come off. They were much higher earlier on. We've got the S&P futures, the Dow futures, and let's look at the NASDAQ futures, which are here, which I lost. Here we are. Well, that's up slightly. That's doing slightly better than either the Dow or the S&P 500. Finally, the other chart that you can use, even with an hourly chart, an hourly time chart, is actually the Renko chart. Now, what Renko does, it's purely price-based, so you don't get any noise, you don't get obviously any wicks, and this is set to 3 pips. And what it does, not only does it help you with entries and exits, and also help to keep you in. If I just move that down a little bit, here we are. This is the move higher. This is the part of the move higher that we've seen in the Aussie dollar. And what it also does is basically it kind of gives a structure to the price action. You can see it's a very geometric chart, as we can see. We can see a trend, we can see a pullback, we can see a correction, we can see a consolidation phase. And by using 2 of our particular indicators, the trend dot and the trend monitor together, as I said, it can help you with the actual entries. What we look for is a match of the trend dot and the trend monitor. The trend dot changes first, that's much closer to the price action, and then with the trend monitor. And what this is telling us, so I've just come to I came to my screen earlier on. Clearly I've missed this, and what I have to wait for now is, well, is this going to carry on higher? In which case, as we know the levels that have got to be broken, we can see them on the hourly chart, we can see them on the faster time frame chart. It's having difficulty getting through there, it's consolidating. This is picking up the consolidation that we can see on the 10-minute chart. It also gives us a sense of how the momentum behind the moves at the moment, and there's not a lot of momentum. How do we know? Because this is not time-based. This is purely based on the numbers of pips going through the market. This is 3. This will only complete once 3 pips have gone through the market. This brick will complete at 3 pips. So you know what I said earlier about the matrix, about these numbers at the top, as at 34, which is, you know, quite a low number for the hourly chart. So what the Renko is confirming is it's a bit sluggish. Doesn't mean there isn't going to be, you know, an opportunity, a trading opportunity, but at the moment it's first of all, it's stuck between different levels on the hourly chart. It's moving in consolidation on the faster time frames. I've even got the 5-minute chart here. We can see the consolidation. Looks like it may want to break to the downside, but it's got to break these significant support levels here. The Renko chart is possibly, you know, signaling that may reverse lower. We don't know. I've got to wait for the change of trend. I've got to wait for the monitor to change as well. And looking at the daily chart tells you, well, if I'm going to take this trade to the downside, well, what is it? Is it a high risk trade? Is it a medium risk trade? Or is it a low risk trade? Well, generally speaking, this is still kind of in a consolidation pattern, kind of holding pattern, if you like, on the daily chart. It's already had this big move higher. What I would be trading, what I'd be taking is, can you see the tiny wick here? I would be trading this very small reaction to these two, you know, a positive day so far, and, you know, not such a positive, but sort of positive day yesterday, but there was a weakness in that candle. So, you know, all things considered, and given where we are in terms of support and resistance on both the hourly and as I said, this happens to be the 10-minute chart, but I can move it to the, let's move it to the 15. It's probably easier. Let's have a look. There we are. There we are. But we still have this, as you can see here, the levels, the Camarilla levels stay the same, because it's only between these levels are up to, but not including the hour. We're in this consolidation. We're moving sideways basically. And if I expand this and we look at the lines, this is, you know, even more telling. When they're kind of moving in the same direction, we're in consolidation. So just by looking at what the indicators are telling us, looking at support and resistance is one of the key elements of volume price analysis. We use the way we define it on our chart is we have price-based support and resistance based on Camarilla. We have on Ninja, we have the accumulation and distribution indicator, and here on MT4 and MT5, we have these lines. They're slightly thicker lines, stronger. The hatch lines are not so strong. And we actually have volume-based support and resistance as well. But I don't want to talk about volume-based support and resistance at the moment based on the VPOC, because I just wanted to pull all these different elements together to sort of talk you through, you know, what we're looking at on the Aussie dollar, you know, highlighted by what the indicators tell us, and really also as an example that if the Aussie dollar was one of your preferred pairs to trade at the moment, there isn't a trade, there isn't a clearly defined direction, and the reasons are we have consolidation on the faster time frames, we have consolidation on a sort of a medium-term time frame around a significant resistance level, and that resistance level is being reinforced by a very important resistance level on a slower time frame, which is the hourly chart. So it's really sort of putting all those things together, and it's what you need to look at when you are thinking, if, as I said, Aussie dollar is one of the pairs that you like to trade. And you may think, but if you're like us, that you think, oh, well, there's nothing in there at the moment, I'll just go and find something else, because there's always something else to find. And I suspect David has found something for you. So I will pass over to David. Sorry about that.
Hi, everybody. Hopefully you can hear me. Hopefully you can see my screen. Yeah. Yep, brilliant, lovely. Anna's behind me. I've actually got three. Sorry. Yeah. I've actually got I've got 3 platforms running on this particular machine, so a huge amount of data coming in. So I've got quite a few charts closed down. I've got NinjaTrader here. The reason I've got NinjaTrader up, first of all, was just to get a fix on sentiment, really. And bear in mind, obviously today is Inauguration Day. So President Biden will be speaking, no doubt, and the markets will be waiting and watching. I'll explain what that is in a minute, all these alerts coming in. So it's just getting a fix on where we are in terms of sentiment. You can see pretty much it's pretty flat for the YM and the ES. The NQ had a really strong day yesterday, but I have to say it wasn't particularly reflected in the yen pairs, which normally it would be. So it was there was a little bit of a disconnect yesterday. What you will find, and you'll find this quite frequently, is that the yen pairs in the forex market will often lead what is about to happen in the equity market. So don't always expect that the two correlate so closely that they move in lockstep on an intraday basis. Generally speaking, they do. Sometimes they don't. And sometimes you get strong moves in yen, in a yen complex ahead of a strong move, maybe the day after even. Monday was an interesting day because the currency pairs were, or the currencies anyway, very strongly overbought and oversold on the CSI, certainly on the slow time frames, but nothing actually reacted until the following day, till Tuesday, till the markets got back to work again. So you've always got to factor that in as well. So that's where we are in terms of sentiment, broad sentiment, if you like, and that's on NinjaTrader. What I want to do next, I've got quite a lot on here. Let's just pull over, let's start with Tradestation. Let's pull that over there. Here we go, because you haven't seen this before. We've literally got this up and running now. This is on Tradestation 9.5. So this is the partnership between Tradestation and Interactive Brokers. So the data feed, the live data feed for this account is being delivered by one of our Interactive Broker accounts, which we've got linked through. It means you can trade direct off the screen and all the rest of it. I'm not going to go through it in detail, but it's just this is the currency futures workspace. And what I've got down here on the left, I've got the currency futures. So I've got the 6A, which is Aussie. I've got the 6B, I've got the 6C, which is CAD dollar. I've got the 6E, which is Euro dollar. Then I've got yen dollar, and I've got New Zealand dollar down at the bottom here. So this is a very simple complex on radar screen. I have got all these alerts coming in as well. I'll cover those later on. I've got time intervals here. I've got 1, 2, 3, 5, 10, and 15. So I've got a real mix of time intervals. And then on the radar screen itself, we've actually developed we've obviously got, you've got the indicator on the chart itself, but then on the radar screen, you've also got the option to add it in down here. So as you can see here, I've got the volatility indicator, which I've obviously got on the chart over here. I've got the quantum trends. I've got the trend monitor, and that gives us the trend line as well. And what this gives you is a complete heads up on what is going on in terms of the trend monitor on the various time frames across all these particular charts. So you could get an instant snapshot. You can see where volatility is coming in. You can see them right down here. This is on a 15-minute time frame. This is on euro dollar. You can see here that we had a volatility indicator triggered 3 bars. Well, it's 4 bars ago now. And so it just gives you a heads up, and you can click on these. These are all linked together. And it's just such a powerful feature of the Tradestation platform. This is on, as I say, this is on 9.5, and Anna will be showing the version 10 and above, which we're focusing primarily on stocks there. but it's just a very powerful way to to consolidate a huge amount of data and to actually move very, very rapidly between charts in various time frames, and in addition to that, also get a fix on what is going on in terms of the quantum indicators in those time frames. You can see what trend monitor here, it's red, red, red right the way through. It's changing to red on 10, it's changing to red over here on 15. So we've had a transitional change. And as always, you know, down at 8 o'clock here, around about London open time, we get all the volatility. This was 7 o'clock. This was, I'm going to have to default those off. This was on 7 o'clock. This was as we came into Europe. We get a volatility trigger. Market goes into sideways congestion, what we expect to see. We then come down. Then we're into London, 8 o'clock, more volatility. And of course, on here, I've got the futures volume. And what this also indicates to you very strongly, what Anna mentioned earlier on about the relationship between tick volume and futures volume such as this, and you only really have to put the charts side by side and you will see they correlate very closely. There's been an awful lot of studies done over the years, people looking at the relationship, and it's roughly 90 to 95% accurate. And I can tell you that using it on spot is absolutely fine, and we have done it for many, many years, and you can check it for yourself literally by aligning it with a currency futures chart here. So that's a very quick run through on, I will spend more time on this obviously, but it just gives you a sense of the indicators, how you can put them on the radar screen. You get this wonderful array of information coming in all the time. You can see what the trend monitor is doing. Is it in blue? Is it in a transitional color? You know, over here, what's the trend? What are these are the trends, these are the trend dots. What are they doing? What's happening to the trend monitor? And it oscillates between +1 and -1. So +1 is positive, -1 is negative. So when you see a red option down here, that's negative. And where you see -1, -0.5 or +0.5, that's where it's in transitional phase through the transitional colors of either very bearish to very bullish or vice versa. You can see literally what's happening. We've got a volatility trigger that's being picked up over here on the radar screen. And it's being associated with high volume, so clearly the market makers are involved with that particular move, and it just gives you a straight heads up on what to expect next, not only in terms of volume, but also in terms of the indicators. We've also developed, as you'll see on here, let's pop this one up, full size, make it a bit easier, there we go. We've also got the accumulation distribution indicator on here. This is works in exactly the same way as it does on NinjaTrader. And what it does is it basically presents the strength of that level immediately by eye, because you can see here this little 8. That means that that level was tested 8 times. It was extremely strong. It held for a while. We've now penetrated it. Got another one above it, 6. So this whole area was extremely strong in terms of the way it was like to act either as resistance or as support. It was acting as support there. It's now been breached. And on we go, and we go down to the next level. So we've developed all the indicators across. Let's just, sorry, I mean to do that. I've got the spot on here as well. There we go. Let's just change that over to, let's put that to 1. There we go. Exactly the same principles. You've got the radar screen here, and what I've done here is I've actually created a complex for each. So this is euro, this is for the yen, this is for the dollar, this is for the British pound, this is for the Aussie. I didn't have space to put them all on, so we've got what, 5 there. But basically this is across the complex. And what I've also done in here, I've put the CSI, which is in the radar screen. And what you'll see straight away is you've got these columns here. Not only is it giving you a sense of the actual level that these are at, what it also tells you is whether the currency is overbought up here or oversold. You can see we've got the pound Swiss, we've also got the euro here in those various time frames. So again, it also gives you information about crossing information down here. And again, I've got the volatility indicator, I've got the trends, and I've got the trend monitor over here as well. So you've got a massive amount of information here. And the thing to think about is really that each of these little cells, and you can have up to 400 of them on this particular version, you can have 1,000 on the Tradestation securities version at 10 and above. Think of these little cells, each as a mini chart, if you will, because if you click on any of these, they're all linked. You go over here and you pull the information up immediately. I'm going pretty quick because I've got a lot to get through. So let's just move that one out the way. So that's Tradestation. Oh, on there also we've got sorry, this was a similar chart this is a similar format to the currency futures again, going back to where I started. And here I've got the volume point of control. And again, I've got it in the radar screen, so it gives you a heads up on where that particular level, in other words, the VPOC itself, the yellow line itself, where is that in relation to that particular time frame on that particular chart? And again, you can go up and down. Sorry, it's driving you nuts, I'm sure. Sorry about that. I will actually get those defaulted off next time. So there we are. That's just a very quick run through on 9.5, getting it all up and running. Let's just move that out the way for a moment because I want to bring in the TradingView, which is this one. There we go. And what I've got set up here, this is on the yen complex. Now, those of you who come along regularly, you know that we started beginning of the year. We started with this little account with a few $100s in it. I think it was 800 and something. And what we've set ourselves the task is, or I've set myself the task is, and Anna's doing the same on an account she's got, is to trade this up using some very, very simple risk and money management rules. It is very much aligned to as you see, on the Tradestation, you can set up different ways of having alerts. And these are piling in because I haven't defaulted them off, but they're all coming in, telling me things about what is going on a particular chart, on a particular time frame. You'll see them coming in at the bottom here. Sorry if it's driving you nuts, but I will actually set them to default off. So as I say, this is a little account. It's got a few $100s in it. We started around 800 and something, and we're now up to, I think last week we were around just coming up or over 900. We're now up to, as you can see, 921. So in the space of a week, we've made roughly 20 odd dollars. And you can say, well, that's not very exciting, is it? And the answer is no, from a monetary perspective, it isn't. $20 is neither here nor there. What's important is the fact that represents 200 pips, and 200 pips is significant. But what it teaches you, and I would urge you to do something, because you might say, well, it doesn't matter, you can trade this any which way you like. And yes, I could blow the account out in one trade if I wanted to. But I actually take as much care with this account as I do with all our other accounts. The simple rules that I have on this, I am only trading one micro lot on whatever I'm trading. The maximum is around about 5 trades at any one time. So in other words, my effective leverage, if you like, is roughly about 5 to 1. And that's pretty much the same as on the funded Forex accounts. I have a stop loss, obviously, on every single position, and that's pretty much the rule set. That's it. So I'm not going crazy. It's very conservative in the way I trade it. And the time frames that I look at this particular account are much, much slower. You can see, and let's just drop that away again. You can see up here, this is on the hourly, so I've got the CSI set to an hour. You can see what's going on in terms of the yens right now. They're all climbing, or certainly the pound and the yen, the pound and the Canadian were. We've now got volatility coming in. We've got volatility here on the 15, and over on the 5, you can see we had a volatility on 5. What are we expecting with volatility? We're either expecting a full-blown reversal, or we are expecting congestion, one or the other. And if you've got a position in the market and you get a volatility trigger, and you're in profit, then I would say take your profit, get out, because you can always jump back in again. There is no big deal. It's the cost of trading is peanuts. This is linked through to a little FXCM account. I have to say, TradingView is great for trading. You just click on there, up it comes. You can buy or sell. You can market limit orders, whatever type of orders. Set your stop loss in there, and off you go. You can take profit in as well. It's very intuitive, it's very simple, it's very clean. Great volume on here, as you can see. What have we got? We've got rising volume and a falling market, which is what we want to see. Trend monitor starting to transition. And you know, there's an opportunity if you are looking at that particular time frame. And that's really what it all comes down to, because as I say, on this particular account, what I'm looking at constantly is I'm looking at the much slower time frame, the much slower perspective of an hourly up here. This is 1 hour. So what have we got going on at the moment? We've got the pound, which is still climbing, so we're getting up into overbought. The dollar is very strongly oversold. What we're looking for also, as Anna mentioned, in terms of risk, when you're trading in this particular way, and it's primarily what we're using here is really baskets of currency pairs. We're not trading individual currencies, we're putting on 3 or 4 trades at a time. What you are looking for constantly is the aspect of risk, because what you're seeing now is really a perfect example of that. You've got the commodity currencies rising. This is the New Zealand, the CAD, and the Aussie. And on the other hand, you've got the other risk currencies falling. You've got the Swiss franc, the yen, and you've got the dollar. So when you're putting baskets on, not only is it a question of aligning it to the buying and selling of the actual pair, but you also want to be aligned in terms of the risk aspect to that basket. So if you are trading a risk on, then you're looking at selling either all or some of these and buying all or some of these. Equally, if you're looking at risk off, then it's the inverse of that. You're looking at selling these and buying some of these. And I can't stress that too strongly. It's what you have to look at the whole time, particularly, as I say, if you're trading a currency pair in isolation, it doesn't matter, of course. But if you're trading baskets, then you've got to be aware of the twofold aspect, if you like, of not only am I not trading against myself, in other words, if I've bought pound yen, so I'm buying pounds, selling yen, have I sold pounds somewhere else? In other words, I'm trading in 2 directions, which I don't want to do. But in addition to that, it's also understanding this aspect of risk to make sure that you're aligned with risk. We've got a big volatility candle building here. You can see the volume that's building. If I had this on the table right now, if I was long pound yen and I was on this sort of time horizon, I would be closing out right now and taking my profit off the table. Why? Because I've got a ton of volume come in. I've got a volatility trigger. I don't want to be sat through a congestion. Yes, it may well shoot on up to the next level. That's fine. If so, then I'll jump in. What I don't want to be sat in is congestion. I can also see I've got volatility over here. I've had volatility here. This looks as though it's rolling over. We've got lots of volume coming in here as well. And you can see the New Zealand dollar here. It's hit sort of a level here, and it's just going sideways right now. Now, there may be a particular reason that the pound carries on in isolation, and God knows we've had enough of them over the last few years, from Brexit through to all the negotiations and everything else, when you would see one particular currency rising or falling very strongly out of kilter with what else is going on in the complex. But if that is not the case, then it's a warning that perhaps this is not the one to stay in for too much longer. In addition to that, it's now getting up into overbought. Now, there's nothing to say in the rule book that the pound and it could stay here for a long time. If you're trading reversals, then I may have to accept the fact, and I do all the time, particularly on this account, that when I set these up, this position may sit here for several hours before it actually reverses. And one of the reversal triggers may be news. One of the reversal triggers may be a session crossover. For example, if I've got these trades on in the morning, that position may not reverse until the US session takes hold. I'm perfectly happy sitting there with wide stops. You have to have wide stops on there because that is what is going to keep you safe, stop you getting stopped out, excuse the pun, all the time. But then the payoff is in the return. You make a much bigger return because you're getting in early into the trading position. You're not trading a trend, you are sitting there with a defined tactic of reversal trading, and that's pretty much what I use on this account, and really not a lot else. So I just wanted to highlight that for you. You can see what's going on. Down the bottom here, I've got the dollar. Just pop that up full size. There we go. You can see the dollar. That's a term. We had a volatility trigger. Again, worked in exactly the same way. Into congestion, volatility trigger. Now it's starting to pull away quite strongly. So we've got a strong dollar buying, which you can see coming in there. Now, if that continues on, then obviously that's on a 15-minute time frame, then that's going to be reflected over onto the hourly CSI. Let's just pop that back out of the way. There we go. Let's just pull the Tradestation back on again. There we go. Just before we wrap up, being run over time. There we go. Pop that up full size. There we go. That's on the 6A. Sorry, is that 6A? Yeah, that's 6A. Let's see what's going on in terms of the pound. Let's go to click on the pound. See what's going on in terms of the pound. So bear in mind, this is obviously pound dollar. And whilst we've got buying on the pound yen, which was over on TradingView, this will now start to be impacted by the fact that we've got the dollar is being bought quite strongly. And whilst the pound may well have strength, if you've got both the pound and the dollar rising, then you are going to see at the very least a pause point. You can see the amount of volume that's come in here, absolute ton of volume. So you've got a ton of volume under this, which is what tells you that this is where the market makers are playing right now. We've got the volume point of control up here as well. We've got another load of volume coming to under that candle, but that candle has hardly moved. The spread on that candle is a fraction of the spread on that candle. So what's that telling you? It's telling you there's a ton of selling gone into that last candle because it's effort and result. There's a huge amount of effort and not a respective amount of result that you would expect. In other words, effort and result are out of balance. They're out of kilter, and it's the analogy we've used in the program is very much to along the lines of imagine a car driving up an icy road on a mountain somewhere, and you're applying more power to the accelerator, to the gas, and at some point you will get to a state where the wheels are just spinning and the car is not actually moving forward, or it may be just crawling forward. In other words, you're putting a huge amount of effort in, but the car is actually struggling to move up the incline any further. And it's exactly the same principle here. It also applies in downtrends, but this is easier perhaps from an intuitive point of view to understand. So you've got massive amounts of gas being applied to the accelerator, and the car is going nowhere. It's very thin, it's a very narrow spread candle. And it's just a classic example of what we're looking for constantly in volume price analysis and the application of volume price analysis in terms of anomalies or confirmation. Are price and volume in agreement, or are they in disagreement? And that's what we're looking for the whole time. You can scan across here, you may be able to see it, but we've got a volatility candle down here as well. So we've got volatility there too. Right, I'm just going to move that back out of the way, pop that over there with the others. Got the trading view up there as well. That's all fine. And just finally, just to wrap up, where are we in terms of sentiment? Well, you can see it here. The YM is absolutely on a razor blade. The NQ is trying to rally, and the ES is doing pretty much what the YM is doing. So in terms of sentiment, they are pretty much one and the same. There we go. Yeah, thanks, Chris. Yes, a lot of work on Tradestation. It was a massive amount of work, I can assure you. There are certain things that we've got to tidy up and bits and pieces here and there which will need some attention as we get going, which is always the way with software development. You can test to a point, but it's really only when you start running it live that you pick up all the little bits and pieces. As I say, you can see all these alerts coming in the whole time. They can be a bit annoying when I've got so many charts running, so we've actually got that defaulted to on. I think we may change that to defaulted off, and then you can decide whether you elect to have that on or off. It's very simple to do. In fact, if I just pull it back over again, there we go. Let's just click on one of these, format analysis. Sorry, it's very small here. Just go into format. There we go, and you've got all the general bits and bobs there, but that's the alert, so you can enable or disable the alert, and you can set that for yourself if you wish to have that on or off. So it's all there. We've tried to put as much as possible into it as we can think. All the indicators are Very much aligned to NinjaTrader. As you see, there are slight differences between the two platforms, which we'll go through over time between Tradestation 10 and 9.5 about which indicator are available and one or two which are not, because it does depend on the data feed. But I won't do that now. We'll do that in another session. So there we go. I think we've covered everything. Thank you everyone for coming along today. Hope you've enjoyed it. Let me just run through very quickly where you can find all the bits and pieces. This is quantum trading. This is where you'll find all the platforms, MT4, 5, NinjaTrader 7, 8, TradingView and Tradestation. What I should have said when I had the TradingView platform up is that we are working, literally the development team are working on the indicators to come across. That is currency matrix, currency array, currency heat map, the volume point of control, the support and resistance. So they will all be coming over to the TradingView platform in the next couple of months. If you have the full package of TradingView, even if you're on the EPP plan, you will get all those free of charge, because when you invested in the program in that particular platform, they weren't available, and we only feel it's fair that you took that risk with us. So we are rewarding you, if you like, with giving you those indicators free of charge. So if you haven't got the package, it's not a bad time to buy it, because once those are released, as I say, probably in a couple of months or so, they'll be done. Then the price of that particular package will be going up pretty much close to MT4, 5. But as I say, if you're on that particular platform and you have the full package, then you'll get those added to your account free of charge. This is where you'll find Tradestation, either the one you've been looking at today, 9.5. Anna will have Tradestation Securities up later on, which is version 10 and above. In terms of the education program, this is where you'll find it at quantumtradingeducation.com. The funded program is an option. You don't have to join it, but it's only available to our students. You will find some information about it down here by clicking on this button, but it is only available. You will not find the pay buttons outside of the education forum, or outside of the education program rather. So you do have to be on the program. And the reason we've decided that is because we want those of you who've joined the education program, the complete forex trading program, to have the opportunity yourself to trade a fully funded account starting at 15, 5, 10 or 15. That goes up to 60,000 on the 15, then it doubles, so it goes 122, 44, 80 on up to 2 million. And clearly there are risk and money management rules because you're trading our money, of course there are, but they are conservative, and they will also teach you, and it's the evaluation stage will teach you to be conservative and to build up a track record to prove to yourself that you have an approach that works, that you can be consistent, because this business is about being consistent over time. And that's the reason we've got these little accounts running, just to prove that you can be consistent over time. And whether you're taking $20 a day in terms of 200 pips, or whether you're taking 2,000 or 200,000, it makes no difference, because once you've got that consistency, the money is really irrelevant. The money will come. So it's not about the money when you start, it's about finding consistency. Finally, you can find Anna over here, annacooling.com. All the books there up on Amazon. You can find all the links to everything, the complete forex trading program, the funded program there, details on that, and all the platforms here as well underneath. So there we are. Thank you very much, Steve, for coming along today. Really appreciate it. Hope you've enjoyed it. We're actually doing 3 sessions today, so we are back at 2:15 UK time. So that'll be 2:15 to 3. Then we're going to make a cup of tea, and then we'll be back at 3:15 to 4, which is will be very much on stocks with Tradestation 10. So there we go. Thanks ever so much. Hope you've enjoyed it. Hope you found it useful and enjoyable. We will be back later on. We have to go walking in the rain now. Lovely. It's a storm blowing here. Hope they haven't got a storm where you are. And we will see you later. Bye for now.